In this video, I will show you how I plan to invest for 2025 to have a winning year, regardless if we have a recession, regardless if inflation is back, regardless of the interest rates. I think the portfolio I have right now is filled with great companies, with great management teams, with a great vision, and it is very likely to grow in the future because the earnings of the companies I own are very likely to grow in the future. My name is Christophe Nour and welcome to this channel of stock pickers. I've been stock picking for 10 years now, almost 10 years, and have achieved a performance of 25% per year. So I'm very happy with the portfolio I have, and let me tell you, just you and I, how I plan to invest in 25, and if it can improve your efficiency, if you can learn one thing or two out of this video, that's it. You made my day. So now let me talk about the trends for 2024, what happened and what is likely to continue for 2025, and how to invest accordingly. Okay, in 2024 you have the great AI boom. We had the Magnificent Seven going higher and higher and higher. Apple going to all-time highs with a high valuation. Nvidia going to all-time highs. That's great. Great cheap momentum, a lot of demand. Google going higher. Meta going higher. Amazon going higher. Tesla going higher. You have the Trump presidency, Trump election. You have a lot of bullish momentum around stocks. And if you look at the valuation for the S&P 500, it went up. Now we are at a PE ratio for the S&P 500 of around 30. Okay. If you look at Meta, it's around 25, Google around 25. We are biased because of Apple of high P ratio. I mean, Apple has a P ratio of 40, Microsoft has a P ratio around 40, Tesla P ratios is very high, Nvidia same stuff, above 40. But if you look at the remaining part of the index, the S&P 493, we are not talking about the same kind of growth. A lot of businesses are slowing down, a lot of businesses are stable, and the valuations of some of these businesses in the S&P 500, some valuations are crazy cheap. I'm not talking about cyclical industries, oil and gas, marine transportation. There are some companies, American companies, in pockets of the markets that are very cheap. So you just have to find them, analyze them, and I will be ready to invest in these pockets if they continue to be cheaper. But so far we will see how this continues. So this is what happened for 2024. Inflation came down to 2-3%, so that's fine. Interest rates are decreasing from 5% to 4.5%. So this is still above 4%. That's fine. So we are still in a normal interest rate period. The interest rates we had for the past few years of 0% was a completely crazy scenario. It is very unlikely. Maybe it will never occur in the future, ever. So this is an extreme scenario. Now I would not say interest rates are high. I would say interest rates are normal, 4%, 5%. That's fine. That has been the average for a long time, so that's normal. This is the story. Inflation, tech, AI, tech, inflation going down, interest rate going down. That has been driving the S&P 500. Now Trump is elected. Now Trump is building a team for the government that is very pro-business, business friendly. They plan to reduce taxes in the US from 21% to 15% tax rate. They plan to reduce regulation in the US. Elon Musk is playing a huge role, political role, in terms of efficiency. You have all the green flags to have a great 2025. But we come from a high valuation. We start the year with a high valuation. So actually, if you look at AI, we are in the first innings of AI development. We are not at the late stage of AI. We are still in the mega growth phase. And it's very likely that companies in AI will continue to grow more and more. You see on Twitter, on X, developments of copilots technology. You have a very large runway for AI. And We will have things for AI that we can't even imagine now. It is similar to the internet when it was created. Would you have imagined that with the internet you will have an app and a car will come and pick you up and drive you and you don't know the guy? I'm talking about Uber. Would you have imagined Uber driving, Lyft, Uber Eats? I mean, instead of going to Walmart, people go to you. I mean, that's strange. And I believe that we will have the same phenomenon, that we don't know what we don't know. The same phenomenon with AI. We are very likely to use AI for the next decade, but that's just a macro bet, and everybody has the same opinion, so I'm not adding any value here. My guess is the development will continue. My guess is more competitors will come in the AI sphere, and it is kind of likely that this will drive up earnings. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. I would say that for 2025, I would be very worried to invest in a pure play of AI because of increased competitions that will reduce margins for everybody. Everybody will want to eat each other's like sharks. But for the companies like Google, Amazon, Meta, Microsoft, Salesforce that can implement AI, they announced their guidance, they announced their capex, they plan to continue in the same direction. The same way they invested a lot in technology in 2023, 2024, they will continue in 2025. So this will be it. Next question is, how do you position yourself? How do you position your portfolio? Either you buy them, or you buy Nvidia, or you buy Lens for data centers, or you buy some stuff that is hated in the market in the UK. How do you position yourself? That's some good questions. Now I am very aware of this big boom in AI and very aware of the hype around AI. Yes, the S&P 500 has a PE ratio of 30, but the hype, the momentum is very elevated. When I saw some weeks ago that people showed a screenshot of their gains, their portfolio gains on Twitter, I'm feared. I mean, I'm fearful of this situation. I don't like to see when people share their screen saying, "Okay, guys, look how genius I am. I invested in Bitcoin. I invested in this. I invested in Fart Coin. I invested in Hokuto coin. All this stuff is going up, and it seems like everybody feels like a genius." I don't like this environment. This is frothy. This is very eccentric, optimistic in the market right now. And I have some of my friends that want to invest now when we are at all-time highs. People that jump in the market right now, they make the bet that 2025 will be huge because of Trump presidency, because of data centers, because of AI, because of nationalism, because of... They do this bet. And you can be right. I mean, the S&P 500 could be up 30% in 2025. If the efficiencies that everybody's talking about, if the efficiencies are here, wow, you will talk about cost-cutting measures, efficiency, margins going up for all the big tech. That will be crazy. I wouldn't bet on it. I mean, the valuations are still high, and I don't think we will have the most optimistic scenario. I think we will have a decent scenario, but anything can happen. We will have maybe a black swan event, and we will be crushed. Anything can happen. Next question, how do you position yourself with all these assumptions? One, I don't want to invest in expensive stocks. I won't invest in companies with a PE ratio above 30-35, like expensive companies. I won't touch companies with a PE ratio of 50-60. I won't touch them. So in case we have a drawdown, when you have a drawdown, the expensive companies are crushed, like way more than the normal companies. If you invest in cheap companies, on the other side of the coin, if you invest in cheap companies, the drawdown is limited. So that's good. So I don't want to touch expensive companies because I don't think the risk reward is very appealing here. Second, in case anything happens, I want to invest with companies with a nice balance sheet, with a strong balance sheet, with a lot of cash, with a minimal amount of debt. If the company has no debt, that's even better. You never know what's going to happen. But there is only one way a company can go bankrupt. It's with a lot of leverage, with a lot of debt. You can do stupid stuff if you love debt, if you love leverage. So most of my companies have minimal debt. They have a lot of cash. They generate strong free cash flow. These are sustainable business models, proven business models that generate a lot of cash without much debt. I love being in this position. And most of the companies I have take advantage of the volatility when you have drawdowns in the stock market because of buybacks, because of smart buybacks at the right time. I own, for example, AutoZone. It's a company in the US, a car dealership. And when the stock declines, they do more buybacks. So they increase the buybacks as the share price drops. That is very smart of allocating money. That's good. That's good. Let me check some notes. Yeah. Inflation will maybe come back. Maybe. In case inflation comes back, I'm perfectly hedged. I'm not invested in gold. I'm not invested in crypto. I have a 100% stock portfolio. And in case we have inflation, all the companies I have in my portfolio have pricing power. They will not be the victims of inflation. They will be the beneficiaries of inflation. I have some lands. I have some great assets. I have some insurance companies. They have they can be very opportunistic when it comes to price increases for their products, services. So inflation isn't an issue. In case inflation comes back to 5% in 2025 because of supply chains, because China is waking up and increases demand for the whole world, because of oil prices going up, because coal prices going up, anything. If inflation comes back, my companies can increase their prices and be fine. The valuations will not be impacted, the margins will not be impacted. That's great. So be aware of this. That could be a good actionable advice for you. Have your companies? Oh, I don't know how to say it in English. Do they have pricing power? Do your companies in your portfolio have pricing power? How do you see if they have pricing power? Either you study qualitatively the business model, how the business model works, or you just check the gross margins for the business. If you have a high gross margin, it is very likely that you have pricing power. Like a software, for example, like 80% gross profit margin. And if you don't have high gross margins, maybe you don't have pricing power. So this is a good indicator. You have other indicators, but that's a good one. So that's it. I want to be prepared in case of inflation. I want to be prepared if you have a shock, a black swan event with a lot of cash, strong balance sheets, etc., etc. I want to be prepared with companies with a moat. All the companies in my portfolio, they have a moat. They have a competitive advantage. I'm not talking about average business. These are superior business models positioned in a very good industry, growing industry, and they are very likely to grow in the future because they have done it in the past. They have grown earnings per share, free cash flow per share. So it's very likely that the future will look like the past. I'm invested in great companies. And this is also something that has changed since 2024, since the beginning of this year. It's that I don't want to invest in average companies. I only want to invest in quality names. I'm okay paying up a little bit, but I don't want to invest in bad companies that will stay bad. In other words, I don't want to invest with companies that have a lot of problems. I want to invest in companies with a strong track record of being efficient, rewarding shareholders, etc., etc. So that's it. Strong moat, play safe with valuation, strong companies, strong balance sheets, quality investing. In case anything happens, inflation, interest rates, conflicts around the world, supply chains, China is waking up, Argentina is doing something, Latin America, the US presidency, I'm prepared, fully hedged for 2025. This is exactly the plan. Maybe it will change during the first semester of 2025, but so far this is the exact strategy I will use for the next year. And my portfolio is public. You can type my name on eToro. You will have some links on Google. You just type Christophe Nour on eToro, and this is a public portfolio, public performance, public broker. You will have everything. So in case you want to check the evolution of my portfolio, it's public. Just tap my name, it's public on the broker called eToro. So that's it for this video. It was just a simple video to explain what I plan to do for 2025, and I wish you the best for next year. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a video, a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.